Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex market outlook for the week of January the 25th, 2010. Now with that said, we're going to get started with our US dollar index as we start each week from this point for some time actually now. We've been doing that, so I think it's very good to review the US dollar index before we look at anything else, because essentially in Forex we're either buying or selling US dollars. That is the game. So let's have a look at things now. We've got crossover from Vantage Point did not take place. The 8-day did not cross over the 18-day predicted moving average. We ran flat for a period of 4 or 5 days. Then we can see that we extended higher and the buy signal on the US dollar remains in place despite the volatility of the last few weeks. So we can see now that we have a fresh clean break from Vantage Point. Point of interest here, the lows are clearly higher and the highs are very clearly higher. 78.50, we can see that the last candlestick back here in the middle of December hit that 78.50 mark and then subsequently started to move lower. However, we can see that this week now we've hit the 78.50. It moved a little lower, but the next day we broke clear above that range. However, we have closed the week at 78.27. Now, point of interest here, 78.27, still a good strong close considering Friday profit taking and everything else. Key levels of support that we're going to be watching this week, 77.52, 77.83, and our first level of support, 78.15. So everything looks set for the US dollar index, the DX spot DXY, to make further gains, with which will be subsequently that will be affecting a number of different currency pairs in the Forex, specifically though Euro US, US CAD, and Great Britain US. Now, again, we're going to look at some commodity futures here before we go any further into the Forex pairs. We can see now we have a fresh crossover on crude to the downside. This is going to have a very negative effect on US Canada. So I expect US Canada to move substantially higher based on this. 77.15 is now a critical level of resistance. 76.35, second level of resistance, and our first level of resistance, 74.51, with a very weak close of 72.83. So essentially nothing short of a complete collapse in crude oil. However, we do have some support down here. We can see just above this $70 a barrel. I suspect crude will stay between $70 and $80 a barrel. Excuse me, for the majority of the year, but we'll see how that one plays out. So with the weaker crude oil prices, again, this suggests also suggesting further US dollar strength. Now, going into our next one, we've got gold contracts. Not that gold has a super high correlation here to the US dollar anymore. I don't believe that. I'm going to again reiterate what I talk about each week, and that last year at this time, gold contracts and the US dollar moved higher together for a period of about 3 to 4 months. So we can see here that we've got a fresh crossover to the downside on gold, but we've also got some support down around this 1080 mark we can see here. So I suspect that this will likely hold, and the sell-off on gold will not be as dramatic as what some of the market participants think. We see we've closed at 1089.70. I suspect 1050, somewhere between 1050 and 1080, that we're going to base out on gold, and it'll probably start moving higher again regardless of what the US dollar does. So we're starting to see that correlation break down, and again, based on historical price patterns, looking at gold and the US dollar over the last 12 to 14 months, very possible that the gold and the US dollar will continue to move higher together. So those are our main commodity futures that we always review each week to make sure we're on board with that. Now, we also are going to have a quick look at some of the direct currency futures this week. I want everybody to see this on the Euro FX currency futures. So on an individual basis, the Euro futures are definitely under pressure here. Now, key levels here to watch: 43.48, 42.58, 41.52, with a close of 41.36. We are oversold. We can see this on the predicted TSI from Vantage Point. This is a good indicator for that. However, the predicted MACD is actually not oversold, and it's coming out of oversold territory on the predicted RSI. So kind of mixed signals on our other indicators there. Primary trend is down while below we're short basically while below 143.48. Now, Yen futures definitely worth a look here. This one's a problem. Now on the US dollar based plus the crosses. Yen currency futures are actually gaining strength against the rest of the pack. So what we can see here is we're coming on to a fresh crossover from Vantage Point. The 8-day has just crossed over the 18-day predicted moving average. This suggests that US Japan will move much lower, as will Euro Japan, Great Britain Japan, Aussie Japan. This is a very good indicator for those cross pairs. So again, if you're trading long Euro Japan, Euro Great Britain Japan, or even thinking about getting into buy positions on US Japan, probably not the best time to be doing that. So I think we're going to get a much deeper pullback on the yen, so we'll be following that throughout the week. But again, we do have a fresh buy signal here on the yen currency futures, which definitely translates into weakness on the yen crosses and the US yen. But I'll get into that as we move through the presentation. Now, starting again, we're going to now move into the actual Forex pairs. We're going to start here again, as we do most weeks, with US CAD. We can see here that we're getting into a fresh crossover from Vantage Point. However, my concern is that crossover is not yet complete. We have the 8-day sitting right on the 18-day predicted moving average, sitting right at this 104.05 area. So essentially, we stayed long while above 104.05, and I expect volatility to start the week. However, looking at the way crude oil futures have closed the week, that does not suggest that U.S. Canada has a lot of downside pressure, other than the fact that it is currently somewhat overbought. But as you can see from the predicted TSI, we're coming out of extremely oversold levels. So we have plenty of room to extend on the predicted true strength indicator. So this suggests that the pullbacks are going to be very shallow. Predicted MACD confirming that also. Predicted RSI, we're actually a little overbought. So the predicted RSI is the only one that's really actually giving us an overbought signal at this time. So we're going to stick with our buy positions, and again, we're holding long while above 104.05, keeping a close eye on commodities to see if we get a turnaround there. Because if we do that, we'll put a downward pressure back on US CAD. Australia, New Zealand, we've got a breakout here. 125.51 is currently the base of that breakout. We can see that we've closed at 126.88. Long still favored while above 125.51, but again, we can see a congestion of heavy resistance in this 128 area. So contrarian positions short between 127.50 and 128 are also good. However, realistically, we have to look at potential buy positions at the 125.51 also. And I do expect a retest somewhere between this 126.49 and 125.51. If 125.51 gives away, then again we would be short right away.